You want to know how much house you can afford without having to call a mortgage broker or a realtor? Super easy. It's a 5-minute process. I'm going to show you right now. If you're still confused, please reach out to me. I'd be more than happy to help you out. Come on. Okay, my client told me he makes $100,000 a year. Lenders want to know how much that is a month. In this case, it's going to be $8,333 a month. We're going to divide that by 2. Why are we going to divide that by 2? Because most lenders will lend up to 50% of the debt to income, the DTI of a borrower, meaning that their expenses cannot go over 50% of what they make here. So we're going to divide that by 2. We're going to get $4,166. From here, we have to take off $400 for car payment and another $200 credit card that he told me he's paying a month. So that comes out to $3,566 a month max, which includes principal, interest, taxes, insurance, and homeowner association, if any. So we have to go, we're going to go on the internet now, go on the mortgage calculator and figure out how much purchase price we can buy with $3,566 a month. We cannot go over that. So let's go check it out on the computer. Okay, so now we go into a mortgage calculator that we can find on the internet. There's a bunch of them. This one is calculator.net. I use the one for my company as well quite often. So use any one you want. It doesn't matter. Just type in mortgage calculator on Google. Remember, we can't go over $3,566. So we just start plugging in numbers. For example, we'll start with $500,000. I live in Miami, Florida. So, client says they'll put down 20%. Obviously, they can put down less. You can put down as low as 3% if you want. But let's say they're going to do 20%, 30-year fixed. Interest rate today is May 30th, 2025. The rate's at the 6.95. Thank you very much. Okay, so here's where it kind of goes, where you have to kind of use your judgment a little bit because it's kind of hard. Until you find the property, you don't know exactly what the taxes are going to be. You don't know exactly what the insurance is going to be, or there's going to be any homeowner association or anything like that. So what we start doing, we just start plugging in some numbers. Again, property taxes, I like to use 1.5% of the purchase price. For home insurance, I like to use 1% of the purchase price. In this case, will be $5,000 a year. And right now, there'll be no PMI, private mortgage insurance, because they're putting down 20%. Let's say there's no homeowner association fee. Let's leave it 0. Other costs 0 right now. We're not taking into account their other debts right now. This is just for the mortgage, for a mortgage. So we're going to hit calculate. It's going to give us a number. The total monthly, the principal and interest is $2,647. But to that, we have to add the property taxes and the homeowner insurance. So it comes out to $3,689. Again, we said we can't go over 3,566 because most loans will allow a debt to income ratio of 50. That's kind of pushed sometimes a little 55, 50, but they really like the lower the better. 43, 45 is ideal, but a lot of them will go to 50. They have programs that will go 50, a little bit higher also. So we'll just use 50%. So they can't go over $3,566. And here it's $3,689. So again, it all depends on the insurance and the taxes. So once you find a property, then it might be more or it might be less. So in this case, with those numbers, we're still over the 50%. So we just start changing this number up here. We'll do 475. 175,000, not million. Same thing, 20% down payment. The only thing that changes now is a homeowner's insurance, which is $4,750. and the tax will be 1.5%. So it's going to carry over here when they do the calculations. We'll hit calculate, and look at that. The out of pocket, the payment is $3,504. That's pretty cool. They might go a little bit higher, but just to be safe, uh, if they're making $100,000 a year, and they told me that their monthly debt and credit cards and car payment was $600, so we add those debts. We take off the debts from their income, and in addition to the insurance and the taxes, and it comes out to $3,504. So they really cannot get any more debt, because and then they'll go over the debt to income ratio. Again, gives you an idea. It's not 100%. Definitely talk to your lender about that. But this way you can do it by yourself, and you don't have to call a lender, find out, and wait for them to call you back, or they'll call you back 100 times trying to get your business. I'm a loan officer, but I'm not that aggressive. So, but anyway, this is a fast way of figuring out how much property you can afford for if you're making $100,000 and your monthly debts are $600. Anyway, hope you learned something. That wasn't so bad, was it? Anyway, if you need more clarification or some help with that, I'll be more than happy to help. I'm going to leave my information at the end of this video, my email, my phone number. And remember, if you need help with selling, buying, renting, or financing real estate, please reach out to me.